completely exited its stake in Coforge, selling its 27% stake in the company via block deal this morning. Now, Baring had invested in Coforge in 2019 at an acquisition price of about 1,394 rupees a piece and have exited their stake at around 4,700 odd rupees per share. Now, Sean Salata, the head of Baring Private Equity Asia, EQT, and chairperson of EQT Asia, as well as Hari Gopalakrishnan, who's a partner and co-head at India at Baring Private Equity Asia, EQT, join us on the show to discuss more. It's a big development. Thank you so much, Sean and Hari, for joining us right here on CNBC TV18. And congratulations. At least it has been done in a staggered manner, but a large part of the stake sale today has happened at a price which is a 240% higher price than what your acquisition price was. My first question to you, Sean, is your objective of the first investment that you did in 2019 in Coforge, is the objective complete? What was the rationale of the timing of the exit of the company, and what lies ahead? What have you left the company at to have a good run from here on?
Well, hi, Nisha. Thanks for having us on. Great to see you again. And by the way, congratulations to the country on the moon landing. That's an amazing accomplishment. It's so exciting.
Thank you so much. Thank you.
On Coforge, it's the business has doubled in size since we first invested in the company 4 years ago. Doubled in revenue, doubled in profits, and so it's accomplished much of what we set out to do, but the future of the business is also extremely bright. It's just that our business model is one where we invest in companies, we help them to grow, reposition, and transform, and then hopefully the next owners of the business can continue to grow further. And if you look at the way the stock is performing today, it's up over 6%. I think the future for the business is extremely bright.
Right. And what is the quality of investors and the demand that you saw, Hari, for this transaction? It's a large block deal that you have managed to accomplish on the stock exchanges today.
Yes, we have really high quality group of investors. More than 50 investors participated, and our initial book was more than 3 times subscribed, and which is reflected in the price. So we're really excited to see Coforge on the next phase of the journey with these investors.
But I would go back to Sean on where he left on the future of Coforge is very bright. While on road shows and getting the demand in for the investors, what were the few factors based on which the investors have come into Coforge, Sean? And what is the future potential that now the new investors are really looking at?
Well, I think, first of all, Sudhir Singh, who's the CEO of Coforge, is an excellent manager who's executed impeccably over the last several years. In fact, since we bought into the business, he was the CEO at the time that we invested and has continued to run the business and grow the business. He's done an extraordinary job, and I think he's very credible with investors. Secondly, if you look at the whole sector, as everyone knows who's been tracking this industry, the sector is performing very well just as a result of the amount of spend globally on technology and technology services. And now with AI coming in, there's a view that there's going to be even more spend and more growth opportunities for the business. So I think a way to sort of play that has also helped. And lastly, I'd say that India is probably benefiting from geopolitically from the funds flows, international capital flows into the market as one of the preferred destinations globally, where there's very strong economic growth and where you seem to have, geopolitically a pretty good runway for the country going forward.
Right. So these are some of the factors. In AI, you mentioned that's the next big thing for the technology space in which Baring Asia is also interested in. But Hari, I want to focus on the valuation dynamics. Is the valuations at which you have done the stake sale as per the expectations of Baring Asia as part of the return parameters for this particular investment? And of course, I must congratulate you for the 240% gain that you have got in terms of the share price in which you invested.
Yeah, yes, Nisha. We think that the valuation is fair, and our aim is that the business continues to grow well. As John mentioned, the business has already doubled in size and is well positioned for the next phase of growth. So we would say it was a good outcome for all parties.
And Hari, since you know India so well, you have been focusing on various India businesses. Coforge exit is very different from the kind of Hexaware exit that you had. And Hexaware had its own life cycle in terms of first trying out strategic sale and then delisting. And then an exit was done. And in this particular case, you have in a staggered manner sold off your huge amount of stake that you had, 70% in Coforge. How will you differentiate between the two? And are you comfortable with this kind of an exit mechanism in the Indian market going forward as well for your other portfolio companies? Because strategics generally give a more premium to the valuation because it adds more value to their scale and size.
So Nisha, as investors investing in India, we more than 8 billion invested in India. We are open to all options to exit. In one case, it may be strategic. In another case, it may be a market sell down. And in this case, all the stars aligned to enable to do that. And we hope that we can achieve multiple parts in our investment. So, we are open to all avenues for exit.
Sean, I'll place that question to you as well, since you look at so many other global investment destinations. India is very different. We have a promoter-driven culture of management of the company and the corporate diversified holdings of companies. This is not something which is usual in India. And generally, when the private equity players exit, they like to give it to another strategic player. But this one, now Coforge, is a widely held corporate engine. How do you see this particular trend in India, and is it a difficult situation? We have only a very few number of such examples in India now.
I think it's about the future. This very much represents the future trends. As the sector matures, as you have more founders of companies and promoters who are reaching succession age and may or may not want to pass it on within their families, I think you'll see much more of this. And I think it's very healthy. And I think there's a really interesting symbiosis between private equity and public stock market investors and founders and promoters of companies, because we can be part of that solution to take the company, make it off the hands of the founders, promoters, make it a more professionally run business that's then easily investable and understandable by the public market investors, including the foreign public market investors, who then are looking for those professional management teams to take the company forward. And for us as a private equity industry to handle that process quite responsibly, meaning that the sell down process is done in a measured and organized fashion. It's done in a way where the people who are buying the block trades are making money and benefiting from both the way it's done, but also the quality of the assets that we are now putting back into the hands of the public market investors. And I think that sets up the whole industry and the whole dynamic for long-term success.
Right. Well pointed out. That's a theme that is developing, but it is not an easy trade for sure. But Sean, my final question. Of course, last time you did mention that, there are very few such opportunities available where there is a succession issue in the companies and private equity gets a chance to buy out those companies. Now, being a controlled buyout kind of private equity firm, your views on Cipla and that transaction is going on, and your view on this particular space in terms of pharma and controlled buyouts there?
Well, I cannot comment on any specific companies, unfortunately. I would say that from a sector standpoint, the IT services sector, we think, has really plays to the strengths of India as the demand for STEM talent globally, the deep pool of talented companies in India that are playing to that theme. I think the pharma sector has similar opportunities, maybe not quite as many, but we're looking hard at opportunities in the sector. And we hope to be able to broaden our investment strategy, as we discussed last time we met, with the recent investments into the IVF sector in India, as well into the NBFC sector in India, and really finding ways to continue to invest more into the country's domestic growth opportunities beyond just tech services.
All right, Sean, I hope to meet you soon again when you really buy or exit from any of your portfolio companies as well. But thanks so much for taking out time today and talk about the big news of the day, your exit from Coforge at a very hefty valuation and return parameters. Thank you so much, Hari, as well as Sean, for joining us right here on CNBC TV18. Thank you so much. All right, with that, we'll